For decades, banks cared about one kind of risk: financial risk, interest rates, credit scores, loan defaults. But now, a new kind of threat is reshaping how America's biggest banks think about money: climate risk. From rising sea levels to wildfires, hurricanes, and droughts, the cost of climate change is no longer just an environmental issue, it's a financial one. And US banks are finally starting to respond. Let's break it down. When a bank gives a loan, say for a house, a business, or a farm, it's betting that the borrower will be able to pay it back. But what happens when that property is in a flood zone, or a wildfire area, or a region facing water shortages? Suddenly, that loan isn't just risky, it's unstable. That's what climate risk means for finance. It's not about politics, it's about math. Banks like JPMorgan Chase, Bank of America, and Citi are now developing new climate models to estimate physical and economic risk. They're tracking everything from carbon emissions to storm frequency, and they're using that data to decide where and how they lend. In simple terms, your zip code might soon matter as much as your credit score. Some banks are even reducing exposure to fossil fuel projects, shifting billions of dollars toward renewable energy, green infrastructure, and clean technologies. Others are investing in resilience, supporting rebuilding efforts, flood defenses, and sustainable farming. The US government is pushing too. The Federal Reserve has begun requiring climate risk assessments for major banks. It is not about telling them what to fund, it is about making sure they understand the risks before they do. And here's where it gets interesting: investors are watching closely. ESG funds, pension plans, and large institutions now want to know how climate exposure affects a bank's long-term stability. That pressure is forcing Wall Street to think differently, not just about profit, but about planet risk. But not everyone agrees on how far this should go. Critics say some banks are greenwashing, using climate slogans to look responsible without real action. Others warn that overregulation could choke industries that still power millions of jobs. Still, one thing is certain: the climate is changing, and finance can't ignore it. Banks are realizing that protecting their portfolios also means protecting the environment around them. The old rule was simple: follow the money. The new rule might be this: protect it from the storm.